Well, first up, it will become more expensive to borrow from banks following the increase in the policy rate to 24.5%. This is expected to further push up the cost of living. Now, yesterday's announcement of a 250 basis point hike is the highest policy rate increase since 2017. The central bank cited threats to inflation and growth, but how is this decision going to impact on the money markets and your investments for that matter? Joining us is Head of Data Bank Research, Alex Boahen. Great to have you on the program. It's been a while, sir. So we know by this, interest rates are going to go up and the cost of borrowing will become expensive. But let's talk about individual investments and let's say treasury bills. How is that going to be impacted?
Where they have to beg for existence.
Yeah, sure, Daryl. Thank you for having me here. So we can look at it from two perspectives. One, this is not going to only impact the government because when you raise interest rates, what it means is that cost of funding or cost of borrowing for the government is going to go up and further constrict our already very tight fiscal space. And moving away from the government and the private sector is going to have a massive impact. If you look at companies are already struggling with FX depreciation and high inflation, which is actually squeezing their margins, their profit margins to be specific. So this is also going to add to the higher pressures that companies are actually contending from inflation and the currency pressures. What we are likely to see going forward is that companies that have some significant leverage in terms of debt in their capital structure are going to spend a bit more in interest expenses. So we are likely to see profit margins squeeze even further, looking at the trend of interest rates on the market currently. Because as you know, for the past year, we have seen some of the leading companies in Ghana actually struggling to cope with the high cost pressure that we are seeing both globally and also domestically. We've seen that filtering through the financial performance of some of the leading companies like Farm Milk, like Guinness Ghana Breweries Limited on the market, and even Unilever, which is probably the hardest hit company on the stock market. So, Daryl, looking ahead, I think it's not looking quite pretty at this moment for companies.
Yeah, and I also want to talk about individual investments, for instance, T-bills, because when the interest rates rise, when the policy rate rises, we see that interest rates on short-term securities go up. What advice do you give individuals who have money to invest during these times? Avoid longer-term securities, maturities, shorten average duration of bond holding. What do you tell them?
Yeah, sure. I think that is what we have observed on the market so far. We have seen that investors are actually moving away from the medium to long-term bond into the treasury market to actually help them to reprice after maturity. So we've seen quite a lot of demand for treasury bills, especially last week we saw it in the auction numbers where government was able to meet its auction target. But you could say that in the coming weeks, we are likely to see money market rates also aligning with the new monetary policy rate. So obviously, treasury bills, which are currently moving around 30%, is also likely to go up. And what it means is that it means more returns for investors, but also there's a big issue that needs to be looked at in context because we heard a lot about discussion going around about the possibility of government actually restructuring its domestic debt portfolio. So that is actually causing some sort of uncertainty on the market as to the extent of how that can affect short-term investment securities such as 91-day or treasury bills in general.
You talk about the possibilities of debt restructuring and what that, how that may impact on the markets. I think so many people do not want to hear about that right now. But you were initially also talking about the impact on the stock market. Are we looking at the situation where stock investors become more reluctant to bid up prices because value of future earnings will become less attractive versus bonds?
Surely, surely. We already witnessed that so far this year. If you look at the market, it's been predominantly buyers market. What it means is that there are a lot more sellers on the market with very few buyers. So buyers are actually holding the aces on the market. For example, if you hold shares and you want to sell it on the market, you are likely to do so at a discount because there are so many investors actually offering a similar or the same securities on the market. And that is what is actually causing the decline that we are seeing on the market currently. If you look at it within the context of the 9 months this year and also the 9 months last year, if you do that year-on-year analysis, you realize that the market has significantly underperformed. Currently, the GSE Composite Index has returned something around 12% negative, negative 12%, as compared to last year, where at this time the market has actually returned at the thick end of 50%. So it is in stark contrast to what we actually observed last year. Even if you look at the market breadth, we have about 15 equities that have actually lost value this year. If you compare that to last year, at this time we have just about 6 equities that have lost value and 15 equities appreciating last year. That is opposite of what we have seen this year, where we've seen 15 stocks declining against only 8 actually going up. So that is Daryl, that is also playing out in the stock market currently. But if you look at activities on the market, it's been quite buoyant, surprisingly. If you look at last year, for example, as at the first 9 months, the turnover for the market was around 400 million Ghana cedis. This year, we are talking about 1.2 billion. So that is a significant improvement in terms of market liquidity. Even if you consider or you take out the off-market transactions that happen in MTN in a bid to really offload some of its shares to local investors to meet the local content policy. If you even take out the off-market transactions, the market activity or turnover is still better than last year. So in a nutshell, Daryl, the market has really underperformed, but activity has picked up quite significantly, but it is predominantly it's been predominantly a buyer's market where there are more people selling and very few buyers. That is why the prices are declining across the broad market.
And just some perspective for our audience, for instance, because we are told that the Accra Bears was the worst performing stock exchange in dollar term in the first 9 months of this year. However, in cedi term, it placed 11th amongst 15 top stock exchanges on the African continent. Now, this performance is far from last year's achievement, where it was the second best performing stock in Africa. Meanwhile, 15 stocks lost value since the 1st of January compared with 7 gainers. And all this being attributed to the city's performance as well. And it's especially worrying when, like I pointed out, it's been less than a year since the local Bears recorded one of its best performances to become the second best performing stock in Africa. Alex?
Yeah, as you rightly mentioned, it's mainly due to the depreciation of the currency. The cedi has actually depreciated somewhere in the region of 35% against the USD. So basically, if you are putting all the stock exchanges across Africa, you have to do you look at it in the context of the dollar return. But of course, most emerging markets are going through tough times because of global tightening. Just a couple of weeks ago, just last week, we saw the Fed actually increasing its Fed rate, the rates by 75 basis points. What it means is that the spread between emerging markets and the US is going to really tighten. So it's going to really tighten. So investors or emerging markets, or in the context of Africa, central banks are actually undertaking hawkish monetary policy to make sure that they actually keep up pace with what is happening in the US. But that is not really the story. On the cost side, we've seen inflation also feeding through most African economies. So it's been a challenging time, not only for Ghana, the Ghana stock market, but also for most frontier markets. However, our peculiarity is how our currency has depreciated so far. In fact, if you look at it in the context of our peers or our neighbors, that is not something you would want to imagine.
What's your outlook for the rest of the year, and what would it take to bring the local buzz where it used to be?
Well, I think now the market outlook is significantly depends or is significantly linked to the economic outlook. Now there's talks ongoing between the government and the IMF. We don't know the extent of any possible restructuring and how that is going to impact on market valuation, especially the banking sector, which is likely to see some negative impact as a result of any restructuring that the government intend to undertake. One key thing that I will highlight here is that the government needs to be very, very diligent in touching the financial sector in order not to undo the investment that has gone into the sector over the past or since 2017. Since 2017, you could tell, you could see from the data that our financial sector is structurally sound compared to before the restructuring or before the reforms in the sector. Okay. So government should be quite careful because if you are going to restructure the financial sector, or if you are going to restructure your debt, if you know that in the context of Ghana, most banks invest in government securities. In fact, if you look at the average on the market, banks on average invest about 40% of their assets in government securities, be it bonds and other medium-term notes. Even if you include the cash and cash equivalent, which also has a significant portion of treasury bill in it, that figure is nearly getting to 60% in terms of the banking sector exposure to the government. So if you are going to restructure that portfolio, what it means is that the banks are literally going to take a haircut. What it means is that who is going to pay for that cost? Is it the shareholders or is it the depositors? I think this is something that we need some clarity on, because if shareholders are going to pay, then obviously that will mean that banks will write off through their books, their P&L. We are going to see impairment charges actually going up, and that would also feed through their capital adequacy. So in a nutshell, I think the government must be very diligent in ensuring that the investment that it had made in the financial sector over the past years is not going to undo that gains.
Thank you so much for spending your lunch time with us. Alex Wahin is head of Data Bank Research. I appreciate your time. Now, some enterprises are embarking on layoffs due to the rising cost of doing business and challenging economic environment. A similar move was undertaken by businesses during the height of the COVID-19 pandemic. Now, they say that this is the best option for now to prevent them from shutting down the operations. Mark Bedu-Abuaje is Chief Executive of the Ghana National Chamber of Commerce and Industry, and he spoke on PM Express Business Edition.
Even though we are satisfying our external investors, we also will not do things that will affect the private sector of the country. External investors usually will bring money, but the productive sector should be taken care of. If you satisfy the external investors and you kill businesses, definitely they will lay off people. And recently, one of our members was complaining that he's only operating just about 20%, and he has to lay off people.
Oh, that is happening. The layoffs are happening.
Yes, they are
still happening.
Yes, they're happening.
As it has to do with the cost of credit or the inflation that is weighing into it.
It's a combination. It's an accumulation of the various factors that affect businesses.
Inflation is one.
Inflation,
cost of credit is one.
33.9. CD depreciation, 40%. Cost of credit is now about 35%. Fuel prices are going up. Recently, they have increased electricity, they have increased water.
So the cost of doing business is now forcing some of your members to do another round of layoffs again.
Yes.
We thought that the COVID was the first round of layoffs.
Yes.
Now there's another second round of layoffs going on right now.
But
because of all these things.
If they can't produce, there is no need keeping.
What about cutting down your costs? Some will say that when you business owners, we are always the first casualties. When some of these things are there, you still have a CEO or top directors with very, very, very heavy compensation package. Why can't they? Okay, why can't you do that to try and save some of us?
Where are you cutting the costs? We are producing, we are providing the services. And in fact, a lot of CEOs for some time now would have even suspended some of their benefits just because they want to be able to sustain themselves and sustain businesses. Now is not the time for any CEO to say that I'm even buying a big car or I'm even building a new house. This is the time for every business person, every rational business person will now look at how to sustain their business, how to survive.
Now, after 2 weeks of a distress action by the Bank of Ghana and the Ghana Police Service on illegal forex traders, James Ishan heads back to find out how effective the exercise has been. He brings us this special report.
This is how the day started. After several weeks of warning from the Bank of Ghana to the illegal foreign exchange dealers. The illegal foreign exchange dealers running helter-skelter to escape arrest by the Ghana Police Service. The distress action was mainly taking place at the Central Business District of Accra. At the end of the distress action, over 76 illegal foreign exchange dealers operating in the black market were arrested. Most of the perpetrators were foreigners, mainly from Mali, Niger or Chad. The black market dealers are said to be contributing to the rapid fall of the cedi to the dollar and other major foreign currencies. According to the Bank of Ghana, this is a measure to save the fast depreciating cedi. Speaking to Joy Business, head of Forex Exchange Bureau at the Bank of Ghana, Adjoa Konedu Toto, indicated that the exercise will continue in other parts of the country in the coming days.
As long as we have them on our streets, we need to clean the streets and we need to have licensed ones coming into our central bank to pick their license and paying the necessary taxes that will let the country grow well. It has been a lot of, it's causing a lot of havoc to our Ghana cedis, our sole currency. And even though we keep on telling everybody to engage with the licensed ones, we see a lot of people, and most of them are not licensed. Today, the people we arrested are not even Ghanaians, and they come into our system and distort everything that we think is lawful. So it's just that it is something the police and law enforcement agencies must do. And we came in from the law, from Bank of Ghana to collaborate to give them the muzzle to do the needful. So I believe that the police will continue, other law enforcement agencies will come after those who don't have license.
She, however, maintained that members of the public who patronize the activities of black markets are equally guilty before the law.
Bank of Ghana, together with Ghana Police Service, decided to undertake this long-awaited clamping of illegal foreign exchange dealers from the streets of Accra. and it is something that we intend to do across the country. And as you all know, if you don't have a license to operate in Ghana, a license issued by the central bank, it is an offense to trade in any foreign currency. And for the past few years, we see them seriously engaging in this illegal act. Public education has gone out, and still we see these unlicensed institutions around. So today we decided to start something that will be an ongoing thing throughout the country. We decided, and luckily or fortunately for us, we happened to get over 76 illegal operators on the streets. And we are saying that it is important that the general public desist from engaging in business with these unlicensed ones.
The bank went ahead to issue a statement to deter others from trading from illegal foreign exchange dealers. Head of Financial Stability, Dr. Joseph France, also had this to say on illegal foreign exchange dealers as well as forex bureaus engaged in such acts.
We are able to, sensitize the public. Once we get the alert, we conduct surveillance onto the market, and we get some of these, and with the help of the public, and that tells you how some people are getting to understand and appreciate what we do. So some of these things come to us. People are getting to send us information, send us one alert or the other, send us a few things. In this part of the world, it's very difficult for one to report, like you said, reporting a brother or reporting someone who lives in the vicinity and so on. But gradually, people are getting to know that you shield these people, and you are creating problems for everybody, including yourself. So we are getting some bits and pieces of information as to who is doing what, and then we go after such people. Such people who are unlicensed, we easily put their names out there, like we published last time. These are faceless people who are not even in our system. You go to Registrar Generals, you won't find them. They are somewhere else, and they are operating. And but when we empower the public, for the public to know that these people are Shylocks who, once they get hold of you, will cut you into pieces, will get hold of your money, and probably take advantage of you. Obtain receipts, number one, and obtain identity, number two. This is pasted in a bureau. So the public should assist in this regard, that you purchase forex, and you have to ensure that the bureau gives you receipt. You're going to purchase forex, you give out your ID. The ID is not supposed to, the ID helps you yourself, the purchaser who is going to purchase. Anything can happen. You can purchase forex, you walk out of the forex bureau, and you can be attacked of having stolen money.
Okay.
There will be, what do you call it? A proof that you purchased from the forex bureau. You purchase money from the forex bureau, you're going to put it in your account, and you could be arrested for having, so anything. I'm just citing these examples. So getting your identity to the forex bureau operator doesn't mean that you are under the radar. That doesn't mean that you're under investigation. It's just a proof that ABC came to the bureau and purchase this. You understand? So gradually we are.
All right, that was Dr. Joseph France. He is Head of Financial Stability at the Bank of Ghana. And in that report by James Ishan. More news on our website, myjoyonline.com/business. You get the day's latest from over there. My name is Daryl. Thanks for watching The Marketplace. We'll see you same time next week.